The adoption of a new gold-backed currency may be the BRICS nations' next move. The BRICS conference in August, which will be held in South Africa, will be eagerly followed for any indications of the design and timing of this new currency. And that announcement and launch might be imminent, only a few years away, because it will be convertible into gold and suggest that the gold standard will finally be fully reinstated. That will most likely be accomplished before 2030 by nations that are BRICS members now and in the future. The fact that the BRICS currency will be backed by gold was announced by Russia last Friday may be one of the biggest developments in the gold market. Given that rumors of a BRICS gold standard could reinforce a bullish trend in the market, this occurrence implies a potential buy the rumor, sell the news opportunity for gold. Possibly, the bullish movement that began at the end of June has already continued. Over the past year, gold has done fairly well, which is typical of gold during inflation. A strong short-term swing trading opportunity exists owing to the likelihood that gold prices would rise as a result of this BRICS rumor. Welcome to another edition of Trending Topic. Please kindly give us a like and subscribe, and hit that bell notification feature to stay current with all our latest release. There are already a number of variables supporting the optimistic outlook for gold, with the most recent one being the rumors of a BRICS gold standard. Brazil, Russia, India, China, and South Africa, often known as BRICS, are a new economic bloc that control a sizable percentage of the world economy. Therefore, the news from Russia that the BRICS currency will be backed by gold carries a lot of significance and has the potential to increase demand for the precious metal, which would raise the price of the commodity. A BRICS currency is likely to be introduced at the BRICS meeting, which takes place in late August, if anything at all. In addition to this momentous event, a number of macro catalysts are also in motion. In response to U.S. sanctions against Russia after their invasion of Ukraine, international central banks have recently begun diversifying away from U.S. assets and the U.S. dollar. This diversification has frequently entailed buying gold, which has increased demand and gold prices in recent months. Furthermore, gold has benefited from worries about inflation and U.S. budget deficits. Rising inflation concerns and worries about the U.S.'s financial stability could further boost demand for gold, which is commonly seen as a safe haven asset and an inflation hedge. The prolonged yield curve inversion, a sign of a future economic slump, is another macro event that can prompt asset managers to diversify away from conventional 60/40 portfolios. Wealth managers will be compelled to look into alternative investments in light of this scenario and forecasts of continuous inflation over the next years, which might have a negative influence on bonds. Gold will stand out as a particularly alluring alternative. Aside, there are numerous ways to predict ongoing sustained inflation. The finding that fiscal policy, notably the enormous fiscal deficits that characterize it, is substantially responsible for today's demand-side inflation, and that higher interest rates are unable to adequately address it is perhaps the most intriguing. Higher rates lead to a larger deficit, which exacerbates the initial issue. Another is that de-dollarization and deglobalization both indicate higher inflation in the United States. The former causes supply-side inflation, whereas the latter is just a currency devaluation that drives up prices across the board. Of course, inflation can also decline. Recent CPI prints have revealed a consistently falling inflation rate. The fact that a significant fraction of wealth managers would still choose to diversify and that much of that capital might flow towards gold is important to this theory. And this is where we conclude our discussion for today. We will kindly appreciate your comments in the comment section. Please kindly give us a like and subscribe and hit that bell notification feature to stay current with all our latest release.